Good afternoon, this is Tom Aspray with the Viper Report for Wednesday, March 20th. Well, it was another crazy FOMC day as the markets were all over the place. They were mostly lower prior to the meeting, had a nice rally. You can see the Dow closed at down 141. It made it back to positive territory about 3 p.m. Eastern time and then sold off into the close, down 0.5%. Transports got hit even harder, down 1.3%. FedEx really disappointed on earnings and put a bearish cast on the market yesterday. S&P was down 0.33%, while the Russell 2000, that's a small cap, was down 0.75%, as was the small cap 600. Pretty much negative signs across the board, except for gold and oil, both closed higher. For the day, the market internals closed slightly negative. They were almost 3-to-1 negative in early trading. 86 new highs, 42 new lows. That's a slight uptick in the number of stocks making new lows. This 30-minute chart of the S&P 500 shows you a fairly flat Monday, rally early Tuesday with a weak close. The selling continued into the FOMC meeting. You can see the S&P went from 28.12 as a low up to about 28.44, then closed at 28.25, settling near the afternoon lows. In terms of sectors, energy led the way, up almost 1%, while the financials were hit the hardest, down over 2%. Most of the sectors were lower. Consumer discretionary and utilities also showed some slight gains for the day. In the last video, it talked about the market risk and why I was being cautious in here. This is another chart that shows you that the volatility both in the US and in Europe is quite low. This chart from Bloomberg shows it's back to the September levels. Low volatility usually is a sign of complacency, and often, as it did last fall, results in an uptick in volatility and lower stock prices. You can see the S&P volatility peaked at just before Christmas at over 35, now back below 15. European volatility also very low at this point. The daily technical outlook also has not given the all clear sign, though the NYSE All AD line did make a new high on Monday. The stocks only AD line has formed lower highs. You can see it peaked here, formed a lower high this week. So now it's important that it hold above that moving average and the last swing low. Having taught thousands of traders over the year, one thing many do not realize that being out or being on the sidelines is also a position, and that probably has the best risk reward over the near term. We are looking to buy a few ETFs lower as well as stocks, and if you're interested in specific buy and sell advice and market updates twice a week, you might consider either the Viper ETF or the Viper Hot Stocks Report. Just go to viperreport.com and you can select your service. It's billed through PayPal at $34.95 per month. I'll have another update over the weekend, and also there's a link in the email to last week's article on Forbes.com. Thank you very much.